the then finance ministry officials brought out tax accounting standards. There was 14, if I remember correctly. It was on their website. There also they did they mentioned this thing, and they explained when one is not taking into account the anticipated profit, there should not be any scope of taking anticipated loss also. Whether that is correct or not, I am not going to fight over it. But one has to keep this in mind. This is how these accounting policies are to be formed. Now, if somebody asks me or somebody asks any one of you, what do you mean by accounting policies? Our AS1 has given certain examples that how in our accounts, like retirement benefits, valuation of inventories, foreign exchange transactions, so many other items are there, then acquisition of fixed assets, all these are how those are being accounted for. The way those are accounted for, that is called policy. That my understanding is like that thing. I don't think that there will be anyone who will have some different concept over it. Now, under ICDS, what they are telling, all these policies that are being followed, their prudence cannot have any scope. So, in our accounts, whatever we have done, there may occur a very important deviation, I should say, a difference, a big substantial difference in the figures that will be considered. And this is applicable for all. This ICDS 1, all means all the standards, other standards that ICDS, they have followed this thing, whether it is a recognition of revenue or construction account. It is also mentioned at the beginning of each of the standards, and that's very good, that if there is any conflict between any provision of the Act and and whatever has been prescribed in this ICDS, then the Act will override. If they would not have written that thing, everybody would have known it, because even Act overrides the rules. Now, many of us, whether I am included therein, I don't want to disclose here. The many of us think that this ICDS have got no importance, this is only bringing litigation and all these things. There are so many court interpretations, so we will follow that. If we follow that, then ultimately the department will lose and all these things. But I have got a counter question. Of course, there are so many court interpretations which the taxing authorities don't like, and only in the period before 2 years, we had seen that whenever there had been any decision by any court which was not liked by the income tax department, retrospective amendment used to be made, which we have been assured by the present finance minister that that would never come back, whatever it is. Now, my mind says that okay, if on some issue I find that if I don't follow the ICDS provision for a particular ICDS, because I have got a good backing from court, whether I should go by that or I should try to comply with the ICDS. Friends, I have got a view on these things. Whether you agree or not, that's up to you. Depending upon the particular assessee, depending upon the capacity of the assessee, we will have to judge that. If some big concern comes, who has the ability to fight up to last moment, of course, we should tell that you should fight for it. If we are convinced that our thinking, backed by court interpretation, should override whatever is written in ICDS. But in a case where the informant is not of a very high figure, and also we find that the fighting will be nothing but harassment of wastage of money. There we have to judge that whether we should advise the persons who have come to us for taking advice to follow ICDS or to fight on the basis of court decision. But nevertheless, we must have a responsibility to explain to the concerned person that see, ICDS requires this thing, but you can fight for this thing. My advice is this thing. Without telling that thing, we should not advise. This is my suggestions to you. Now, here at the end of this ICDS 1, they have written how the disclosure will be made. They have written that any another point. Sorry, there is another point that under accounting standards also of ICI, we know that whenever we wish, we cannot change the accounting policies. But one of the reasons for changing accounting policies may be a better presentation of accounts. Here they have categorically stated accounting policies cannot be changed without there being a reasonable cause. Now who will decide whether a cause is reasonable or not? And you know, whatever would be according to us reasonable, the persons who will be checking those things, in all likelihood, that would be considered by them to be unreasonable. So this is also very important. Now, usually one does not change the account policy and it is not expected. But still, I would say that as per the requirement of ICDS, one has to be careful. If the accounting policies that have been followed for maintenance of accounts and which may have been maintained, which may have been followed for the computation of income should not be changed until and unless there can be a very, I should say, strong reason to be shown on which we can fight like that. If you have considered anticipated loss in your accounts, just get it excluded. No scope of anticipated loss. Even now also. Now it is, they have given in writing to strengthen the hands of the assessing officer. And that will come where? Usually what happens? This anticipated loss, mostly where do we find? The valuation process. Is it not? That is not anticipated loss. No, anticipated loss means what may happen in the future. If on 31st March the market value is 5 rupees and my cost is 7 rupees, the income tax department not only the accounts, they are ours. But if I have got 10 rupees shares and I think that in the middle of the month, because of some political problem or something, this value may come down, that I can't take. So I think the point raised by you will not be relevant for the time being at least. Is there any other issue that you may think about this accounting policies or ICDS 1? Then we can have a discussion, otherwise I will go to the next.
So you were talking about changes in accounting policy. Say our AS1, there's 3 conditions. First, there is a requirement of the AS, or there's a change in law, or any other thing which will result in a better presentation. Now under the new scenario, say in ICDS, change in accounting standard is no longer relevant. Change in law will remain relevant and other better presentation. I think that will be the main reason of controversy. That will be difficult to satisfy a department. So what measures should be taken when one is forced to make those changes for the sake of presentation? As chartered accountants, we are supposed to improve the quality of presentation. It should be more amenable for interpretation. So it will always remain a very pertinent question. how to resolve it, how to go forward. Dealing with ITO.
I had just told in a simple language that whatever may be reasonable for us may not be may be unreasonable for them. But the fact is this thing, here we don't have to present anything. Let's consider the practical thing. See, in theory we can say so many things. In practical thing,
What backup document we should generate?
I am telling you,
Have a
I am telling you, see the accounting policies that are following, just for example I am telling you, retirement benefits. Do you presently get it on the basis of the provisions made? Do you get the deductions? There are specific requirements of the Act itself that you won't be allowed. So who in the world will think of changing that policy? Like you won't find many items. If you don't, but when you go for valuation of inventory, you will find for accounts purposes. Just one stray example: obsolete items of stores, non-moving items of stores. In the accounts at the last, in the significant accounting policies, we write, we means the assessment I am talking about, not as auditor. We write that this being non-moving, these being obsolete, so 50% valuation have been considered. For accounts you can do it, but for income tax you cannot.
say for all ICDs, say for valuation of inventory. Now they are saying that in most of the cases you cannot go for NRV. Only for limited cases you can go for NRV. Now how do we reconcile that?
Who told you like that?
We go to the ICDs to verify that NRV, because NRV is limited to very few items, not for all items. Now the restriction is there.
See, it is NRV or cost whichever is lower. It is cost or NRV whichever is lower. No question of market value. NRV, and the definition of NRV one has to appreciate, one has to understand. I am not telling that nobody understands it. At least for me I can say that after I went through this inventory, this valuation of inventory, it struck my mind that till the yesterday I was thinking of cost or market value. Where is that market value gone? Then I checked AS2. There I saw that a long time ago that market value concept is gone. It is also NRV. But that concept, that cost or market value or cost of NRV whichever is lower, that concept will not be available in income tax. You understand what I am telling? In accounts, and also if you open the income tax return form of 456, still they are asking the question, what system of valuation you have adopted? Cost, number one, or cost or market value? That cost concept is gone in income tax. For income tax purposes, cost or NRV whichever is lower. One may say, "Arey bhai, that is beneficial. The lower one will take." Don't forget that stock is one item for which the benefit that you gathered this year will go against you in the next year. No other item is like that. Lower the value of closing stock means lower the value of opening stock. So my expenditure also would reduce. So it is not that in every case there would be benefit by adopting that thing. Now in accounts, if somebody has followed cost or market value whichever cost or NRV whichever is lower, for income tax purposes he has to make a recalculation in a working sheet, and on that basis the valuation has to be taken. Now accounting policies may be changed in so many ways. I am telling you, but most of how we have reflected this in the account, you will find that in the Income Tax Act itself there are specific provisions by which adjustments have to be made, like 43B. The entire 43B, that says what? That says that only on the basis of actual payment. So that means the concept of provisions are gone there. So whether you change that accounting policy or not, there will be no effect here. So what I want to say, that if there be any accounting policy followed for accounts, but which may have to be changed, we have to see that whether that change will make any change will have any resulting change in the income to be computed or loss to be computed. If that is there, then we must be sure that in the income tax, I can be able to show that this was required. If there is a change of law, they will have to change it. The income tax department cannot object because it's a change of law. But what type of change of law, that's another thing. Otherwise, I don't think that what you are telling will create any problem. But the problem will be there if we try to find out that where policies can be changed. In my mind, nothing is coming. Can anyone give any example?
But that is not my issue. My issue is what type of document we should.
Actually, I will come there. See, presently, when you prepare the return of income, I am sure, and each one of you will agree, that until and unless we prepare a computation, we cannot fill in the form. If somebody tries to fill in the form on the basis of the accounts and tax audit report directly, then he or she is not doing a right thing. And you must have seen, and everyone must have seen, that whenever there is only 142 notice, followed by 142(1) notice, it is written that manual computation of income is to be given. So what we do? We keep the return open in front of us, then we make the calculation in a sheet of paper, and there we write everything, and the resulting figure we put in the return. That is called the backup paper. For the purpose of return I am talking about. There is no change in that system. If I want to change any policy, where shall I disclose it? They have not given any space in the newly prescribed forms. But I will have to keep it. Why? Because any day a notice may come. Disclose your accounting policies as required under ICDS 1. Then I cannot say, sir, I will take 7 days time. Like you know, that when you prepare the returns, why we all advise ourselves, we also advise ourselves and also our client that check 26 years. Why? So that we know the latest position of how much income have been shown there, whether that income can be reconciled with the income that have been shown in the profit and loss account. Why? Because many of you, maybe most of you, or it may be all of you, have seen that the assessment department always makes a checking vis-a-vis this 26 years, and wherever they find that 26 years figure is more, they ask, reconcile it, or I will add it. Why? But still we always check it. Why? Because so that there is no harassment. Like this thing, I would say that when you prepare the computation, I don't think that any new thing has come. Let me tell you frankly, I personally don't think anything new has come. Whatever had been there, they have written it in lines only. Nothing new has come. Maybe that here they have excluded the word prudence. That is the only thing. But was it allowed earlier? If your valuation has been asked for, and if you are told, sir, in future my work in progress, whatever I have valued, it may go down, that's why I have valued it less. Will any assessing officer accept it? That's why I am telling you, in so many meetings I have seen, this is dangerous. What new dangerous thing has come, I have not understood. Except in 2 or 3 items, there are certain items, no doubt about it. I will be coming within the first 4 standards because the 5th to 10th will be taken up by others. I may touch on one part. Yes. At the time of my
what I am saying, sir, at present, tax computation is done at the time of financial audit already for computing the tax liability. So now, the ICDS only at the time of income tax return, the tax computation might undergo some further changes.
it may be, and it is always likely possible.
But preferably in the financial audit itself, we should compute the tax liability as per the ICDS.
Naturally.
Basically, this is This is the only difference which we are saying that we have to compare the tax liability with the tax return.
Absolutely correct, absolutely correct, no doubt about it.
Audited accounts.
Usually, unless it is an exceptional case, the financial accounts and audit gets completed say in the month of July or August. And your requirement of filing the return comes in September. Not much gap is there. Please take that thing so that the person sitting there can also understand.
Sir, recently there is a judgment in IT80 that charitable trust enjoying the exemption benefit, section 43B is not applicable. So,
How it is related to ICDS?
no, the reason is that in 43B, certain expenses has to be paid on the actual basis, and the same thing has not been done, and it has been accounted on due basis. How we should reflect it?
Reflect it where?
So as far as ICDS is concerned,
ICDS is only for the purpose of computation of business income
Yes,
or
sir.
income from other sources.
Of course.
A charitable organization comes for income from other sources. There is no doubt about it.
sir, even for business income, sir, even in business income, section 43B is not applicable as per IT80. Recently there is a judgment.
See, just see, without knowing the subject matters,
Okay.
if just you quote one line, I think it will not be correct to discuss that thing. Because the facts of the case are very much relevant for seeing that why such a comment has been made. If somebody says, whether it is tribunal or high court or supreme court, that 43B is not applicable for business, I think it's a wrong quotation. How can you say?
So basically that would become a key basis and the application of cement provided in subsection 15 to section 2. Otherwise, if it is under income from other sources, only in that case it will become a business income. Assessable under that, that's why it is exempted. Otherwise, normally it is assessed under other sources. There is no question of assessing the business income there under business.
Now you see, let me see, if a charitable, let us discuss this thing, then I will go to, since this point has been raised. If a charitable trust runs a school, whether it's income from business or other source, I am asking him.
There is one thing. If we go through the definition of charitable institution, the second table itself exempts it from business activity. It talks about any activity for carrying out education, health, maintenance of public monuments, etc. In the last thing, that is other public charitable activities are covered under other provisions. They are exempt from that.
Let me tell you, it is not a matter to discuss charitable, but still I want to say, if somebody tells that a charitable institution cannot run business without reading the Income Tax Act he is quoting. In section 11 there are specific to subsection 4 and 4A. Those relate only for the business, but the business which has been in accordance with the aims and object. That's why I am telling, if a trust runs a school, it is business income in their hands. If you have got this concept that a charitable trust cannot run business, that's wrong. Only if it is coming in the sixth lane, that is, it is not in education, it is not in poor relief, it is not in those specified things, then only. Even if I run a hospital, that is also my business income.
Sir, but due to definition, that will not be treated as business income.
Who told you? Why are you telling this thing? I don't understand. Why? From where you have got this thing? This is a wrong concept of yours. Then ITR 7 that could not have got these columns for business. There is a specific question. If you remember, there is a specific question in ITR 7. Are you running business? And whether that business is in as per the aims and objects. I have given you example. Hospital running or school running, those are nothing but business. But those businesses are run without the motive of earning profit. That's why they get exemption. And this section 2 clause 15 is not applicable for them. Why? Because that is under medical or that medical relief or that is under education. I'm giving an example. There are certain organizations who collect the dress materials or dresses or handicraft items from villagers, poor villagers. Then they sell it. It is nothing but business. But since it is a poor relief, that's why they don't fall in section 2 clause 15. So if you have got this idea, my request to you, please take it out from your mind. It is not nowhere written that a business cannot be run by a charitable organization. There are specific provision in section 11.4 read with 11.4a.
My question is not
Sir, come back to ICDS.
Okay. Okay. Now regarding this AS1, ICDS 1, if there is anyone has got any specific item of issue, otherwise I will go to that next one. Next one is the valuation of inventories. It is more or less like AS2 with certain very important deviations. I am just coming to the deviations first. First of all, it is categorically stated that inventory shall be valued at cost or net realizable value, whichever is lower. So, for income tax purposes, I cannot consider cost. I can consider cost provided it is lower than the NRV. This is a deviation from our AS2. After reading this, again I am admitting, after reading this, I have gone through the definition of NRV, that is net realizable value. It is not market value. It's a very complex definition. If anyone has gone through it, I am reading it out. This is the exact line, in the same lines it has been defined in AS2. Net realizable value is the estimated selling price in the ordinary course of business less the estimated cost of completion and the estimated cost of necessary to make the sale. So it has to be backward process. What I want to say is a backward process. It is not market value. But you have to find out the market value then. But that is applicable for whom? Where there is a question of finished goods, WIP like that. Or for raw materials, also one can say, because I have purchased it, maybe today's value has come down, there I will be. But after reading this thing and keeping in mind, and since there is no scope of putting a lower value for the obsolete stores or non-movable stores, what I understand, it is up to you whether you accept it or not, that type of disclosure of accounting policies, that certain items having been physically found to be non-movable or non-moving or obsolete, useless, I cannot make a 50% or 60% reduction of that. So what can I do? For income tax purposes, what should I do? According to me, whatever is the market value, I have to find out and put that. There is no other way. If my technicians, they say, sir, this particular store item will not be required by you, that doesn't mean it has got nil value. Will it have nil value? Because it can be still sold at market. Then I have to find out what is the market value of that and consider that thing. So this is a significant change that has come from that is in between AS2 and ICDS2. Then